Yeah, it is a bubble right now. The interesting thing about Bitcoin is that if you have $2,000 of Bitcoin and you owe $1,000 at the end of the month, what happens if Bitcoin drops to more than 50%?
Hello, Daniel.
Hi, Robin. Nice to be here. Thanks for inviting me on the podcast.
Of course, I saw you on X, and I was researching a little bit about you, and I also stumbled upon a podcast about you on Barstool podcast or something like that. And there I heard that you are in Bitcoin since 2010, and I was like, wow, I want to talk with you.
Yeah. No, I'd first heard about Bitcoin on a website that talks about tech innovation and that kind of thing. And it's usually pretty negative about it. And they're like, "Oh, some Japanese guy made up fake money or something." I thought, okay, that's pretty interesting. And because I'd heard about, I'd paid attention to different attempts to try to make uh, digital money before, and generally they failed and whatever. And but still, like, you think, well, maybe someone will figure this out at some point. So I thought that's pretty
Yeah.
interesting. And again, I really didn't take it seriously for quite some time after that. And then, years later, I started meeting other actual Bitcoiners in person. And I was kind of amazed. And I met people who were, far more bullish than I was. I just thought this is an interesting project, and I met people that thought, oh my God, this is world changing. So that forced me to
What
learn a lot more about the basics and how it worked and why it was working and how it was different, and then that inspired me to try to teach other people.
what time around was that where you got Bitcoin fundamentally? Like 2010, you discovered it. I think you also started mining there.
I mean, yeah, I mind, I tried mining some Bitcoin in different forms, but also lost a lot of Bitcoin and gave Bitcoin away, and there were a lot of different mistakes that were easy to make in the early days. Um, but it was yeah, I'd say it was maybe like in the bear market after the Mt. Gox collapse that I started looking into what Bitcoin actually was and how it was important, how it fit in with everything else, with economics, with technology, and so on, right? Because Bitcoin is a lot of different things. So Bitcoin is also the thing that requires people to actually take their computer security seriously, because the
Yeah.
information
So
is money itself, and that's kind of the problem, right? When I've met people that was saying, oh well, it's fine if you only store $50 worth of Bitcoin in a way that's not that secure. And because again, all right, you can keep $50 of, say, cash in your pocket. You don't need a bank vault for that, right? You might want to carry that around. The issue is that if the hackers can simply take everybody's $50 from their cash in their pocket at the same time, that is a lot of money, right? And then the system doesn't work if it's trivial for them to do so. So even for a small amount, it forces everyone to start thinking, yeah, how can I actually make the computers and cell phones work for me? How can I make them something that is completely loyal in the way a dog is loyal to its owner?
and why did you adopted Bitcoin in the first place? And maybe in a comparison, why are you still holding on to Bitcoin? Why are you now into Bitcoin? Did the reason change, or what did your thought process over the years change? It's quite a long time, also like over 10 years.
Um, well, the thing is that Bitcoin itself has changed, right? It went from this, experiment to see if it might work to a project that was attracting a large number of really smart and interesting people who you might not even be able to hire to work on your project at any price. There are certain people that they're intrigued because it's an interesting puzzle, or simply because they feel like they're actually making a difference. It fits with their ideology. Um, so and then it gets to the present point where you have all these large financial institutions, sovereign wealth funds, countries that want to be involved. It actually is getting closer to this kind of global standard. right? So in some ways, the risk return is better now, in that um, the probability of Bitcoin not existing in a few years is much, much lower than it was in the past.
Yeah, the risk drops with every year. With like, you can make an argument with every day Bitcoin went on and the protocol is still running. All the blocks are mined. I think we are actually at the point where it's so unlikely that it crashes, that we can basically have a really good risk reward profile right now. Like, it's such a no brainer to invest even a little bit. Like, I'm all in. Like, I'm still till 2020 full on a Bitcoin standard. I adopted it personally, but even if you say like you have to invest a little bit, like a small portion, you have to at this point if you're educated a little bit. What I was wondering, how did Bitcoin, the environment? You said you went on to in-person meetings, on conferences. How did the vibe of the conferences change? I only know Bitcoin from 2020 on. I went to conferences in 2021 on. I imagine it was completely different 10 years before that.
Yeah, I think it really has changed, right? And I feel like there are some people who were involved early on who still wish it was more like a private club of the treehouse of just their friends, as opposed to something that you see on television and in newspapers, and so on. That Wall Street wants its piece. Um, but yeah, you definitely had more eccentrics, um, more people who were it fit into their ideological worldview, right? Like Austrian economists and libertarians and so on. And some of those people, I don't know, they simply left the space or they went crazy. I don't know. But there's other people that they're still there, but then it gets diluted over time as more people come in for different reasons. People coming in as seeing it as an investment, um, or just just something interesting that's cool to be a part of, right? It becomes part of the zeitgeist, right? Just like everyone's been talking about AI for the past year, for example, right? So at a certain point in time, Bitcoin becomes more mainstream cool, and then people just want to be a part of it and see what's happening.
And how is it? Like, I researched before the podcast, Bitcoin was under 1 cent in 2010, and now it went up to almost 70K. Now we are like at 40K. And how is that journey for you personally when you see the price from early on? I think like the first years you probably don't watch the price as closely. Did you even watch the price closely at any time, or is it just like one Bitcoin over one Bitcoin?
Yeah, I didn't even know there was a price for a long time, right? And then it was looking at it later. I'm like, oh my god, like if I had known, that I could have got so many Bitcoin or whatever, and it's frustrating, right? But at the same time, if you know anything that's going to happen in the future, there's profit to be made there and that kind of thing. So even though I missed out on some of that kind of thing, it's still amazing to just see kind of how something unfolds, right? Because with Bitcoin, you have this pre-programmed sequence that's happening till 2140, right? This halving that's going to go on for over 100 years, and it's kind of amazing to see how that plays out, right? How the space changes, how Bitcoin evolves, how people come in and go, what's being built, and what that's going to look like, because it's not at all. We don't know what that's going to look like when the block reward goes to zero or almost zero, right? Then the miners are only surviving on the transaction fees. And what are the transaction fees going to look like then? We're going to find out, right? I can speculate and say, oh, well, there's going to be a lot of transaction fees because maybe, you have institutions transferring large amounts of Bitcoin. They're happy to pay a high fee, or because there's broad usage, or because each fee is actually representing, lightning channel opening and closings that, or rebalancing, that are basically supporting tens of thousands of other smaller payments. But we don't know. Maybe it doesn't look like that. Maybe blocks at some point in the future aren't coming every 10 minutes on average. They're a lot more irregular than that. And we'll see what that looks like. I mean, like if you look at block times in like 2009, those were definitely not every 10 minutes, right? Because now Bitcoin mining is pretty much a business. And you can see, okay, when this miner is making this amount of money per day, and if I overclock it or underclock it, it's going to do this. What is the effect on the efficiency and the heat and the longevity of the machines? What's the depreciation of the machines? But generally speaking, in early days, people were just mining because they wanted to participate, they wanted to see what was going on, and they weren't thinking, what does this do to my electric bill or that kind of thing, or is this even profitable? Does it make sense? So you had these crazy fluctuations, and you can see that from the Genesis block to the first block, it was actually like 6 days gap. So not 10 minutes, right? And you didn't have basically 10-minute blocks on average for months.
No, crazy. Do
But
you see this
I wasn't
as
even
a
there. I wasn't even there for that though. So that was just looking back and being like, oh my gosh, that's really interesting how that played out, right? And if people were relying on Bitcoin for day-to-day payments at the time, they would have had trouble.
Did you see it as a risk that the block reward runs out at a certain time, that they are relying on the transaction fees?
Yeah, I think you can make the case, and some serious Bitcoiners have, that if you knew everything you know now and you were doing it again from the beginning, that maybe you would want the block reward to decrease more slowly. So instead of it cuts in half every 4 years, it cuts in half every 10 years or something, right? Or you can make the case maybe it just decreases but never goes to zero. So maybe it gets cut in by a third, then cut by another third, then cut by another third, instead of being cut in half. Or it goes down to a fixed amount, right? Either in percentage terms or absolute terms, or or perhaps it's just smoother, right? So even if it gets cut in half, it doesn't suddenly drop so much, right? The block reward gets a little bit smaller with every block or every difficulty adjustment, for example.
But wouldn't
yeah, because
yes,
each
go on.
of these halvings have been opportunities for Bitcoin to be attacked. So when you have that drop off in reward, then there's a lot of miners who are now basically priced out all at once, and that's where an attacker could buy up those machines, or just attack because the hash rate is down. So if you had more smoothly decreasing block rewards, that would make the network a little bit safer. But yeah, so there is a concern, right? If there's not enough demand for Bitcoin, then the Bitcoin blocks are going to be uneven or more vulnerable to attack. But again, I think in that scenario, maybe then people aren't valuing Bitcoin that much. So if something isn't that important, and people don't value it, is it that bad if it goes away at that point? I don't think it's that bad. But the issue is that there's a variability of the block reward, right? So if it goes from one block has a huge amount of fees in it, and then the other one has very little, that can create instability, right? That the block times could be less predictable. Miners might wait until there's valuable fees in the mempool to actually turn their machines on. Or you just might see more miners trying to reorg other miners. They're not going to build on each other's blocks. They see a lucrative block and they want to try to grab it for themselves instead of building on top of it.
Are you surprised that the hash rate still keeps on rising, even though we are not even at an all-time high? Like when you watch the price correlation with the Bitcoin mining correlation, you would think there's some correlation, but at some point this broke. And are you surprised about that, or what's your thoughts on that?
Well, it still continues to surprise me, even though it's not new. So if a lot of people, again, all the data is there, go back and look at the price of Bitcoin during 2014. At the start of 2014, Bitcoin was around $1,000, right? And by the end, it was $300. So you think, the price went down 70%. What happened to the hash rate during that period? Right? I don't know if you know, or if you had to guess. What do you think happened to hash rate during the year of 2014?
I guess it went down a lot.
Right, that would make sense. But actually, what happened was it went up, and not just a little bit. It went up 30x. So the hash rate was 30 times higher by the end of 2014 than at the beginning. Which means that, right, if you were trying to mine Bitcoin during 2014, pretty much all the Bitcoin you were going to get from it was in the first couple weeks. So, and then at that point, what are you even doing, right? So it's not like that now, where people are still running ASICs from 5 years ago. Even though the hash rate is up, people find cheaper sources of electricity. They find ways to utilize the waste heat. There are people mining. I don't know what they're doing. But it does seem like there's a number of different miners around the world that have very low operating costs, and they're scaling up, right? Or some people are more comfortable with that idea. Maybe it's easier for the capital to put their money into what they see as a business, right, as opposed to a commodity. So for, say, a traditional investor, they might think, oh yeah, of course I'll put my money into a company that mines gold, but I would never just buy a bunch of gold bricks and then hope that they're more valuable in the future. Even though the mining businesses are very much correlated with the price of Bitcoin. And what would make sense is if more of the mining businesses would actually hedge their exposure to Bitcoin, so that you could look at how well the businesses run, as opposed to saying, well, this Bitcoin miner will become more valuable simply because Bitcoin will become more valuable.
It's great. When we take a step back and maybe focus on the first moment when you were frustrated about the price and you did not buy more earlier on, when was that? I imagine it was quite early for you. And maybe what learnings can you give people now that went maybe into the all-time high in 2021, or they went in now and they feel like they understand Bitcoin and it's good, but they missed a little bit of the buzz?
Well, that's a great question. So yeah, there are times when I told people about Bitcoin, and they said, oh, well, it's a bubble, and I said, well, yeah, it is a bubble right now, right? But the fact that it's a bubble doesn't mean that it's worth zero. The fact that it's a bubble maybe means you shouldn't go all in with all your money at that exact moment, right? But the interesting thing about Bitcoin is that if you actually started dollar cost averaging at the peak of any of these bubbles, you actually got in at a pretty reasonable point, right? Whereas if you went all in at the peak of the bubble, then you would either be forced out at a loss, or you would be very unhappy for several years, right, and be frustrated. So we've had this series of bubbles, right? There was a bubble in 2011 where Bitcoin went from $1 to $30 down to $2. There was a bubble in 2013 where Bitcoin went from basically $10 to $250, down to $50, up to $1,200, and then down to $150. And then almost a double bubble, right? Depending on how you want to look at it. Then in 2017, right, Bitcoin went from around a little under $1,000 to $20,000, and then later went down to $3,150. And then 2021, we had maybe a double or single bubble, however you want to see it, where Bitcoin ran from that low of 3,150, eventually up to 69,000, and then down to a low of about 15,500. So, right. Now there's been these fads, right? Whether it's like Beanie Babies or whatever, Dutch tulips and this kind of thing, where there's one just bubble, prices run up and then crash, and then that's the end of it. But then you have enduring asset classes like real estate or the stock market in general, or commodities, where you do see a bubble, a crash, and then later you can get another bubble, right? Sometimes a larger one. And it's because that the price is not a direct relation, directly reflecting the level of adoption. It can be ahead of it, it can be behind it. So that's the number I really want to look at, right? How many hardware wallets have been sold? How many Bitcoiners are there? How many actual people out there have $10 of Bitcoin, right? Or $1,000 of Bitcoin? Those are the interesting numbers, right? How many people are using Bitcoin every day? You said you're on a Bitcoin standard, right? How many people is that? Those numbers are harder to find. So people sometimes look at the numbers that are easier to find, such as, okay, what's the current price? Well, the current price reflects some of that adoption, but it also reflects very heavily the speculators, right? People who just borrow money or, leveraging into it or have no idea what it is. They're buying it and they hope they can sell it for more dollars. So they put this many dollars in and they're hoping to get more dollars out. And again, that's fine if they want to do that, but they are kind of missing the point, right? A lot of things can make you more dollars, right? Betting on any other stock or tradable entity. The issue is that when the price is going up, then that attracts more speculators. So then they buy in, then the price goes up faster, up until the point where it just gets a bit ridiculous, and then people sell, and then it starts the cascading liquidations on the way down. So those kind of people that FOMO in and then FOMO out, right? They rush in too quickly and then they get forced out. They're really just adding to the volatility and the chaos. Whether they're helping adoption or not, I'm not really sure. Maybe the volatility keeps away some people. Like, it would be nice if Bitcoin kind of went up steadily with adoption, but it's not possible, right? Because if anything is accumulating value noticeably faster than other things, then people are gonna all want to pile into it right now. Bitcoin can't just go up 20% a year for years on after years. So the speculation is unavoidable part of it, basically. So we might be, now you say, okay, well, what's the current price and how is that relative to the number of people using it? We could potentially be ahead of the number of people using it now, but behind the number of people that will be using it in 5 years.
I love the metrics that you brought up. How many cold wallets have been sold? It's I never heard that, but I would love to have a daily metric on that.
Yeah, and again, who knows this? The hardware wallet manufacturers. And who's not giving those numbers out? Hardware wallet manufacturers. I don't know why, because that would be, very inspiring for, I think, the community to have a serious look at what's going on here. The only time we actually got any information about that was when the Ledger's customer database was leaked.
Yeah. And this would also be a metric that would not fluctuate so much as the price would, I guess. Of course, when there's a price run up from 10,000 to 70,000, of course, there are more hardware wallets sold, but it would not fluctuate that much as the price would. Do you see the number go up technology, the crazy volatility you see in the Bitcoin market as a positive? Can it drive adoption? You touched on a little bit.
Yeah, because there are certainly people who come in for the trading, right? There's people who are interested in that makes the headlines, and then maybe not everybody, but some percentage of them, maybe it's only 10%, maybe it's 30%, right? But they might stay and say, hey, there might be more to this than just a number that's bouncing around. So that can help drive that adoption, right? And also the same thing in terms of companies that are building in the space. They have to actually get funding. They have to get attention. So there needs to be a certain level of excitement for that to happen. People need to think that there is a potential of higher returns there than something else. So I can see that case too.
Yeah, I see it now a lot with the upcoming spot ETF. People are saying, no, when the spot ETF comes in a few weeks, we're hitting millions and stuff like that. Like this, I think it's maybe stupid, but it also drives a lot of attention. And attention is where adoption is, because when more people see it, more people are getting educated on it. And but also maybe people are getting frustrated about it and staying away from it. Like it's hard to measure it, but it's definitely fun to watch.
Right, right. It's entertaining, but yeah, it is. I don't like it when people make ridiculous price predictions, right? We've seen whatever John McAfee or Balaji or other people. Most recently, Samson Mo, I believe. Say, oh,
Yeah.
$1 million, this kind of thing. Um, that I don't think that's helpful. I mean, yeah, it gets attention and maybe gets people excited, but it also makes people think this is some kind of get rich quick scheme or something, and then someone else comes along and they start promoting one coin or something else, and they say, oh yeah, yeah, just give me your money and you're going to be really rich. And that, unfortunately, we see this again and again. They run off with people's money or mismanage it or don't deliver. And for someone who doesn't know that much about Bitcoin, it's hard for them to distinguish between those two things.
Did you stay in Bitcoin only? Did you experience with altcoins?
Yeah, I mean, I've spent plenty of time reading different white papers and learning about different things. And um, but generally speaking, any altcoin that I thought, let me buy a little bit of this or something, that was a mistake. Even if something actually does have an interesting idea, then sometimes it's an interesting idea, but it's a bad idea, or it's an interesting idea, but then 20 other people can copy it, and then the value is just continually diluted. It doesn't actually capture that value. Um, so and then there's weirdly value in someone testing something just to show you what doesn't work, right? So there were some there was a coin a long time ago called Fry Coin, and they thought, oh well, the problem with Bitcoin is if it increases in value, then people won't spend it. So we should make a coin that incentivizes people to spend it because it's just decaying in their hands, and then if everyone spends it, it's just going to take over. And it turns out, okay, yeah, you've created something that everyone wants to spend, but nobody actually wants to receive it. So if you created something that everyone wants to get rid of, then it's about as valuable as garbage, right? And then the value quickly goes to zero, and people forget about that. But I think there was a valuable lesson there, right? Um, the same thing where people tried other experiments like using changing the proof of work to something else, right? So for example, with Litecoin, they created that in 2011, Charlie Lee specifically, with the idea of, oh well, if Bitcoin mining is starting to become too difficult for regular people, let's make it something that they can't build an ASIC for. Let's make it faster and whatever, right? These are the selling points. And the problem was they realized, no, you can build ASICs for it, right? Because an ASIC is literally a chip designed to do one thing specifically very well. And something that does things specifically will always outperform something that does everything in general. It's just a matter of whether it's actually worth it for someone to bother to do that. So those selling points, started going away. Um, the same thing with Litecoin saying, "Oh, we're faster." Well, they're not faster, right? They just made a shorter block time, and it's pretty easy to take someone else's code and change a single number, change a parameter. So Bitcoin has a block time target of 10 minutes. Litecoin has a block time target of 2.5 minutes. But the issue, though, is that those Litecoin blocks don't have the same security as Bitcoin blocks. So there's actually a website which shows that, where it shows, hey, you maybe for every one Bitcoin confirmation, you would need like 60 Litecoin confirmations or something, right? Because the chain simply isn't as secure. There's not that as much work accumulated. But then there's something else, which is that 2.5 minutes is still way too slow if you're waiting for a confirmation, if you're actually trying to buy, a cup of coffee, for example, right? And that's 2.5 minutes on average. And sometimes it can be a lot more than that, right? Because Bitcoin's block time target is 10 minutes, but recently we saw a gap of an hour 42 between two blocks. And this is under conditions where the hash rate is doing very well and actually rising. So you see that, for those kind of payments, you do want something like the Lightning Network, where you have a confirmation within seconds, essentially, that the payment is complete. So there were a lot of interesting experiments, but ultimately most of them are dead ends, or some, maybe something you might want to think about integrating into Bitcoin at some point, or something else entirely.
So, in your opinion, the altcoins have no value and they will go all to zero?
No, I'm not saying that, because I can't say things that are, I don't want to say anything that I haven't studied carefully is worthless. And of course, there's always going to be new things that I don't understand, right? So, like, for example, I don't necessarily understand, virtual reality worlds, or, NFT artwork, right? So those might have value to somebody else, right? There are video games like where people, what was it, Counterparty, where people are paying for party hats, and they're not real, right? They're paying for virtual hats, but apparently that has value to them, right? And that's not something that just went away. You might think that's a crazy fad, but then people still want it. The same thing with fancy watches. Look at my watch, right? There's just people I know that are, they'll pay tens of thousands of dollars for a watch, and it keeps time less accurately than their phone. And it's also very heavy, and it requires being wound, and it's not really clear why that is valuable to me. So I'm not going to run around and say, oh yeah, those are all going to be worthless soon, because it's a market that I don't understand, right? So it could be older than me. It could be, it developed later than me and it's too new. That's the way it is, right? So, but I have looked through certain altcoins in a lot of detail, and I can tell you what's wrong with those specifically, right? There are altcoins like Ripple, where the consensus mechanism really just doesn't work. It doesn't make sense, right? There are stablecoin white papers that I read that are like, yeah, this is not going to work, right? And one of them that I read, I knew it wasn't going to work. They didn't even launch it. And then there are other ones where, the whole thing just blew up under the conditions that I saw. Oh yeah, that's not going to work, right? This works in these conditions, but in those conditions it fails, and that's all. But the Ripple consensus isn't even the worst thing about it, right? The worst thing about it is they actually nobody has a complete history of the Ripple blockchain. They claim to have lost it. I don't know how you could possibly lose a blockchain. It's very strange. So they're like, oh yeah, the first like 32,000 blocks, we don't know where they are. So we just count like block 32,000 as the Genesis block, but it's not.
And when you look at another altcoin, I will call it US dollar or the fiat system in general, where we have a lot of history, like 50 years of the US dollar, or even longer if you go past 1971. Where are you seeing this going? There are a lot of Bitcoiners that saying it will go away. We have now a new monetary system. There are some saying no, it will stick around for a long, long while. Do you have any predictions or any thoughts on the fiat system?
Well, yeah. So I happen to like the US dollar, especially because I have traveled to places where their local currency is not that good, right? It hardly holds any value. It's kind of absurd. The largest denomination you can't even buy a cup of coffee with. So the dollar historically has been one of the more responsibly managed fiat currencies. Maybe like the closest competitor to it is the Swiss franc. And when I talked to people years ago who were saying, oh, the dollar is going to collapse, it's going to disappear, I thought, no, you're crazy, right? Not any time in the next 50 years, certainly. But then in 2020, right, something changed. The people that are in charge of the U.S. dollar became a lot less responsible with U.S. dollars, and they also shut down the U.S. economy. And I thought, well, that's actually the one possible condition that could really damage the dollar standing, right? Massively increasing the supply and decreasing the amount of goods and services you can actually buy with that dollar. So I am a lot more concerned now, especially when you consider the total amount of debt, the interest on the debt, the fact that there isn't anyone that's really serious about trying to get the fiscal house in order, to put the dollar back on the right track. However, right, the dollar has been so dominant for so long that even under mismanagement, it's going to be here for quite some time, right? And look, I mean, you've seen in other countries, right? People function even if the currency is losing 10% of its value per year. It's not ideal. I certainly don't think it's optimal. It distorts things, but people can get by on that. And if they feel like they don't immediately have a better alternative, there you go. You're actually seeing a lot more countries now look at potentially switching to the dollar simply because it's an improvement, right? And also you have that stability because that's why actually I'm an advocate for. I mentioned this in the Simply Bitcoin podcast. I'm an advocate for tools that let people separate the price of Bitcoin from the properties of Bitcoin, because there's some people that want exposure to the price but not the properties, right? These are just the investors. So for them, right, if they wanted to invest in gold, they don't want a gold bar sitting around their house. They just want a piece of, they want a digital certificate that fits in their existing stock portfolios. And then someone else, deals with the physical bar and the security and insurance and making sure it's real. So there's people who want that. They want the Bitcoin spot ETF, so they don't have to think about the properties of Bitcoin. They could just get the price. And then there's people who want the properties of Bitcoin, that they can hold it themselves, that it doesn't require an account, but they don't want the price to be going up and down because they have expenses, at the end of the month that are denominated in dollars or something roughly equivalent to dollars, or dollar is the stablest thing they can find, right? If you know you have an expense of $1,000 a month, there's no amount of Bitcoin you could have that guarantees you can make that $1,000 payment. See what I mean? If you have $2,000 of Bitcoin and you owe $1,000 at the end of the month, what happens if Bitcoin drops more than 50% by the end of the month? Then you can't make that payment. So that's where certain tools, DLCs is the one I'm most excited about, discrete log contracts. That will let you essentially offset that volatility so you can get the properties of Bitcoin without the price fluctuation for the people who can't handle it or don't wish to, or just don't want the accounting headache.
Interesting. Because you mentioned it quickly, what are your thoughts about this Bitcoin spot ETF coming up? In gold histories, it was a big deal. It was like a huge catalyst for price and adoption. Do you imagine something similar for Bitcoin?
Yeah, I do think so. The first spot gold ETF was 2005, and the next 8 years were just gold going up from there. And the thing about Bitcoin is actually a smaller market than gold is. So it's possible that will have an even more dramatic impact on that. The other things that people have mentioned is that with multiple spot ETFs at the same time, that means there's a marketing budget, right? These different entities want to compete with each other, and they have to try to distinguish themselves and say, no, you should buy mine, because they get to just collect fees every year for not doing very much, right? That's a good business. Basically, they hold on to your money and then they just take some of it every year. They don't have to make they're not trying to make investing decisions or something, right? It's a matter of marketing and operations. And then the other thing is, just adds a lot more legitimacy. It really helps when other entities are thinking about Bitcoin. They say, oh yeah, there's a spot ETF, BlackRock's involved, Fidelity's involved, this kind of thing. That changes the way it's perceived, and potentially even helps in terms of the regulatory environment, right? Because there's still a risk that Bitcoin could be outlawed, and a lot of people don't realize that that's a concern. But you have to understand, in the U.S., the U.S. outlawed alcohol when something like 95% of Americans drink alcohol. So we're certainly not at 95% of Americans using Bitcoin, and even then, we're not out of the woods on that, right? So that's potentially something very disruptive that would drive a lot of businesses elsewhere.
But there's a difference between outlawed and killing it. Do you still think Bitcoin can be killed by just outlawing it?
No. So yeah, the cost to kill Bitcoin has been rising, right? Somebody in a board person in 2009 maybe could have done it if they wanted to, right? And then by 2012 it would require an eccentric millionaire, and by 2017 it requires a small nation state. um we're not fully out of the woods here, but it just seems like the remaining entities that have the billions of dollars necessary to disable Bitcoin and the machinery to disable Bitcoin are no longer interested in doing so, right? And at that point, it would involve cutting undersea power cables, confiscating the assets from ETFs and exchanges, using weapons. Um, I don't like people to say anything is invincible because complacency is bad, and it is important to recognize that there are entities around the world that have nuclear weapons. We're fortunate that they're not using them, of course, but they can.
But they are way more like it would be a way smarter move for them to join it than to kill it. Like that's the whole thing of the game theory, right?
Exactly. The game theory of Bitcoin is pretty beautiful. That it actually makes much more sense. You see, when a country is saying we're pro Bitcoin, all of a sudden there's a lot more money, a lot more tourists flowing in there. If they say they're anti-Bitcoin, that doesn't help them at all. And certainly for a country, recently Samson said he was in Suriname and talked to the president there, and Suriname was apparently considering putting 1% of their reserves into Bitcoin. And the nice thing about that is, from their perspective, they might not believe in Bitcoin, right? So maybe they think, oh, Bitcoin doesn't go anywhere, it goes down. Well, they're only risking 1%, right? But if Bitcoin does do really, really, really well, as many people think it could from here, that 1% could become 20%, 50%, 90%. So it's still that asymmetric bet. It still makes more sense for entities to think, I should have a little, and just in case. And then that changes it. At that point, they're not against it, right? They're more open to it. We still kind of have this problem where there are entities, like there's some newspapers, right? They think, oh, we can't allow any of our journalists to own any Bitcoin because they'll be biased. The problem is the journalists own dollars, right? So if the Bitcoin and the dollar are competing to some degree, then they are very much biased, right? Like if somebody has all their stock in oil companies and they're not allowed to own any stock in Tesla, and then you expect them to be unbiased writing articles about Tesla, no, they're very much biased there. So that hopefully that will change over time, right? That people will realize that nobody's unbiased here, so you should at least have a little exposure to this, and then people can consider, okay, what do I think of this? And it doesn't have to be based on trying to talk up their book.
And wouldn't you not even prefer information from someone that has exposure, because this person most likely has done more research than a person that has no exposure at all? Like, from my point of view, of course, it's also interesting to see the opposite view, just to get the whole point. But like, I wanted to have, like, when I see someone speaking about something, and they don't have exposure at all to the thing they are speaking about, I'm like, you don't even, like, you're not involved. Like, why are you talking about that?
Yeah. I mean that is it, right? At least people should send one Bitcoin transaction, right? Or set up 12 words in a hardware wallet, at least to just know what they're talking about. That's been one of the frustrating things I've run into, because sometimes I have spent time talking with people who just hate Bitcoin, right? I call them no coiners, and I tell them, like, you're telling me that 90% of transactions on Lightning fail, and I'm like, okay, well, it's not 90% of my transactions that fail. Is it 90% of your transactions that fail? And they're like, well, I've never sent one. I'm like, well, can I send you one now? No. So they some people just seem really committed to staying in their bubble. They don't want any facts to break through, because it can be disturbing when you realize you are wrong about something. And that's happened to me in my life, where I realized some thought I believed for a long time. It turns out is not true. I was wrong. and that doesn't feel good, right? Initially, right? But then you realize, okay, but I'm less wrong than I was before, so that's progress. The good thing is we don't need to convince those people, right? The people who are completely opposed to Bitcoin, no matter what, they don't need to be brought along for the ride. They're not 99% of the population. They're just a different 1% than the 1% of people who love Bitcoin for some reason.
And my story was that I was actually I was a stock investor. I was someone that was really highly valuing the stock flow, like the revenue, the profits, and if it did not had a cash flow, I did not invest in it. And so in 2020, more and more people came up to me and, what are you thinking about this Bitcoin thing? And I said, no, it's a scam. I don't like it. And then I was going through more and more arguments, and I was discovering I don't have any arguments actually. So I was on the journey, like finding arguments against Bitcoin, and I was discovering that I was just wrong. That was a hard thing to do.
Yeah.
And when you are telling people and friends that Bitcoin is a scam, and then you research about it, and you're like, ah, shit, I should have researched before I open my mouth. And also my guest, I think 3 weeks ago or 3 episodes ago, said you should not have a valid opinion on Bitcoin if you did not study it at least for 250 hours. So
Right, but then becomes the challenge, right? Because if someone says to you, "Oh, you can't have an opinion on China unless you've lived there for 5 years," well, or someone says, "Oh, you can," someone is taking hallucinogenic drugs, and they insist you can't have an opinion on that unless you do it also, right? That becomes a problem, right? Because some things you can't do without it, potentially having a massive negative impact on yourself. So that's all, right? So I don't think it's fair to say to someone, "Oh, you need to have a lot of Bitcoin or something. You need to be deeply invested in it to have an opinion." But just to learn a little bit, and with an open mind, just to interact with it in some way a little bit, I think that is really helpful. um, yeah. So for me, a long time ago, I was on a commodities trading floor, and it's pretty amazing to see people trading gold over there, trading oil over there, trading sugar over there, trading cotton over there, and each area of the floor is just people running around waving their arms, And I asked somebody, I said, "What's the price of sugar?" And they're like, 13. I said, 13 what? And they're like, "I don't know." Because the units doesn't matter. They bought 13, they sold 14, they made money.
But you bought the amount of sugar, like was a kilo? What was 13?
Yeah, I mean usually the contract sizes were like pretty large, maybe around $100,000, right? So, like the standard contract for gold was 100 ounces of gold, right? And the standard contract for oil is I think 1,000 barrels of oil. So those are pretty large quantities. But so what I found was the commodities people, a whole bunch of the people I knew from back then, they ended up making their way over to Bitcoin, and I think it was easier for them to understand it, right? Because they weren't thinking in terms of cash flow, and they were a little bit more open to, hey, this is just a different thing I can buy and sell. Whereas people from the stock environment, they're looking at it like, where's the yield here, right? That doesn't make sense. If I just buy some gold bars, why should I expect those to be worth a lot more in the future? And really, you shouldn't, right? So sometimes you do have commodities rallies, but the thing is, commodity rallies, and then they can dig up more of it. They can produce more of it. They can melt it down from different places. They can figure out how to use less of it, right? When copper rallied dramatically, they figured out how to redesign air conditioners to use less copper. When the price of oil went above $100 a barrel, they realized, oh, all this Canadian shale is now viable. That wasn't before. So we just have way, 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 way more oil than anybody really thought they did. At a certain price of gold, you can just extract it from ocean water, basically. It's just not economically viable to do so and anywhere near the current prices. Right? There are asteroids out there that potentially have incredible amounts of different precious metals. Just the cost of retrieving them is very high. So Bitcoin really is kind of unique in that the Bitcoin price runs up. Yeah, more people go into mining, and maybe they're being stupid, right? Maybe too many people are mining, but it doesn't matter if 100 times more people are mining; they don't produce any more Bitcoin. Whereas if you look at some of the classic gold rushes, right? They discovered gold in late 1840s in California. People come from all over the world to just start digging up that gold, and they get a lot more gold. A lot more hits the supply of the market, regardless of whether most of those people ended up making a lot of money or not. Some people did, but a lot of people didn't. So yeah, I think the reason that Bitcoin has had outsized returns and may have some outsized returns left is simply because it's just undervalued, right? It's kind of like going to South America in the 1500s or something, and there's just plentiful gold, and it's not as valued as highly as it was in Europe at the time. So they can trade other commodities for gold at very favorable prices, right, and come back to Europe and be rich. So I think there's this basically one-time thing that Bitcoin is very undervalued relative to what it's worth once people recognize what it is, once there's a large circular economy in it. So you can buy Bitcoin at that discount, right? So you can think of, let's say, whatever, pick some number, right? These people have been running around saying $1 million. So let's say, you're buying Bitcoin at 10,000, you're buying it at a 99% discount, right? And if you're buying it at 50,000, you're buying it at a 95% discount, right? And if you're buying Bitcoin at 500,000, you're buying a 50% discount. Cool. But if you buy Bitcoin at $1 million, there's, in this scenario, right, there's no reason to think you're going to make money from that, or at least not in excess of any other particular investment. Once it gets closer to a fair value, then you can have those outsized returns, right? And people want to say, well, it could keep going up in dollar value forever. Yeah, well, that's true, right? But the same thing, you could say, oh, well, in Zimbabwe dollars, you're a trillionaire. But that doesn't mean anything. The question is, how much food can you buy? How much land can you buy, right? Can you buy a house with a Bitcoin? And I could certainly see a scenario where Bitcoin buys a nice house, but I don't see a scenario in which Bitcoin buys 10,000 nice houses. That just doesn't make sense.
Are we reaching fair value when everybody adopted Bitcoin? Like, where is the stop for Bitcoin? Where's the fair value reached?
Yeah, that's a tricky question, right? And people have approached it different ways. One question before that is, what percentage of people are going to be part of this Bitcoin economy, right? And there's the tendency for Bitcoiners to say, oh, well, Bitcoin's either going to be wildly successful or a total failure. And even Satoshi said something like that. He said, oh, yeah, in the future, there'll either be a very large transaction volume or none at all. But it doesn't have to be that. It doesn't have to be one extreme or the other, right? Maybe Bitcoin is successful, but it doesn't become the world currency. Maybe it just is used by, millions of people, and that's it. Or it's used by 1 billion people. I mean, even if Bitcoin is used by 1 billion people, that's still the majority of the world never uses it. So is that a success? Is that failure? I think it's a pretty good success. Maybe it's not the full potential, but I think it still could be fine. So it really depends on Bitcoin's ability to scale and to build some other improvements that will make it more practical for regular people, as well as regular people getting more security on their computers and phones, as I said, because right now it's not good enough, right? People still have the mentality of, oh, I forgot my password, I'll ask them to reset it, or some random person calls them and they start giving them all sorts of sensitive information. As long as we're in that scenario, it's still more difficult for people to be able to handle digital bearer cash in this way. Yeah, I don't know what the fair value is. I mean, my kind of internal estimate is, 1 Bitcoin equals 1 nice house and land. But it could be higher than that, because you could look at things like, okay, maybe the total addressable market is actually more than 8 billion people, right? Because now we see with artificial intelligence, with robots, it makes much more sense for them to use something like Bitcoin than it does any other currency, right? I can't imagine ChatGPT is going to run around paying for API access or for data sets using gold coins or credit cards or bank accounts or paper currency, writing checks. That doesn't make sense, Even if the traditional fiat system could accommodate it, they wouldn't, or they won't in a reasonable amount of time. Whereas just Bitcoin simply natively works. It's kind of funny with things like Amazon Turk, where they're kind of farming out micro tasks to people. There's things like that, right? If you're paying in Bitcoin, then it kind of works. You don't know whether you're paying a robot or a person or what country they're in exactly. It kind of abstracts that away. It works much nicer than any traditional system, right? Already we see with companies that are spread out with their employees all over the world, Bitcoin is actually the easiest way to do it. So it's possible we have a addressable market that's much, much bigger than anybody thinks, which would be neat. We'll see what that looks like.
I think that's a great way to end it. We have a end routine on the podcast where the previous guest asks the next guest, without knowing who the next guest is, a question. And the question for you is, what is proof of work for you? And you can interpret it and take it wherever you want. you want to take it.
Yeah, I mean, I like the Bitcoin's proof of work. It's actually pretty elegant in that you have something that's you can adjust the difficulty to whatever you want, and people can verify it very easily without having to actually recreate all that work. I actually know someone who's fitness instructor, personal just coaching and so on, and he created a proof of work Telegram group recently, and it's pretty cool that people are showing like their fitness gains as a result of putting in the work, right? And those the muscles are that proof of work. So I think it's a neat metaphor to take over into life. Like, what do you have to show that you actually have been showing up every day and doing something?
It's a great way to end it. Where can people find you if they want to hear more about you or see more about you?
Yeah, the best place right now still remains Twitter. So that's DKA218. I assume you can post that. My DMs are open, and always happy to talk about Bitcoin or related topics.
I loved it. Thank you, Daniel.
Sure, this is fun.